Hey guys, today I found a new post from a user named Tenebrae Vision X. And the question is, should I sell my rental? I bought a condo in 2015 and lived in it for a couple of years. I have a 3.5% mortgage with about 37,000 left on it until it's paid off. I moved about 3 hours away, so I have it managed by a company for 10% of rent. I've had to pay for some minor repairs, replace an appliance or two, but it's been relatively stress free. I don't really make anything off of it now. Once it's paid off, I figure I will produce about 9,600 a year after taxes, insurance, and HOA fees. It's appreciated quite a bit. I could probably get 250,000 for it now. Bought it for 107. If I took that 250 and invested, it would only have to make about 4% a year to make 10,000 a year. I realize there are selling costs and capital gains, and so I'm not going to be pocketing the full amount. So again, going back to the question is, should I sell my rental? And it sounds like he's optimistic that he can put that in the market and it will give him more than 4% a year. Or maybe he's heard about the safe 4% withdrawal rate and you can kind of take it out indefinitely, so they say. All right. So a couple of things. I guess my take on that is that I don't know the whole details and numbers and stuff like that, but based on the numbers that I'm hearing, it sounds like his principal and interest is about $800 per month, which is about 9,600 a year, right? Which is what he's saying he's gonna be able to make once the mortgage is completely paid off, right? So after tax, insurance, HOA, and that sort of things. So according to that, I'm guessing he has about, I don't know, 4 years left on it, maybe a little bit more than that. Is that what it is? 37,800, 3.5% interest rate. Yeah, a little over 4 years, 50 months. So, and then, I guess it's gonna either you would have to wait 4 years until it's completely paid for to take home a little bit more money, because I think you mentioned about the taxes, and according to your tax bracket, you pay about 15% taxes, which is about 21.5. But you mentioned something about some loser stocks that could sell to offset a lot of that. I would definitely check on that with the CPA to see if that's actually going to be the case. I don't know. My understanding was you can only take so much of a loss on that. I don't think you can take tax break on the entire amount. But I could be wrong. So that's what it is. So if you pay off your mortgage, you pay taxes, you pay your fees and that sort of things, and 3% for the fees, but then you might have to pay a little bit to kind of sell it, maybe fix it or pay a little bit of selling costs or something like that, or sell a concession or something like that. So I'm guessing you're gonna probably take home about 180 plus or minus to get the 10,000 a year. I think you would need about 5.5, a little over 5.5% dividend, right, which would be cash flow, unless you do like option trading or something like that, that you would need in order to get that cash flow, right? Of course, you're gonna get an appreciation in the stock market, which you can actually get appreciation in the real estate as well. So right, so that's a depends on what your outlook of appreciation is on the stock market is, right, versus real estate. Of course, generally speaking, the appreciation on that is a little bit better. But one other thing to kind of think about is that I don't know if you've been doing it. Of course, I don't know if it makes sense for you to do it if you're thinking about selling the property. Is that you could also look into, again, CPA, talk to the CPA, right? Not me. But you can get a depreciation of your the property because you're renting it out, and you can get a depreciation value in that. So some of those the rental income that you're getting, right, won't be taxable. And they might not be doing it because if you're breaking even on it as is, or if you're losing money on it as is, maybe your accountant said, well, it doesn't make sense for you to do it because you're not making any money off of it, right? So maybe that's the reason maybe you're not doing it. But there's actually another thing you can kind of do, when there is a positive cash flow, right? So something you can't really ignore when it comes to figuring out which is actually a better option for you. Because if it's completely paid for, and if you're making, say, 10 grand a year on it, if you do get a, let's say, depreciation of that for $10,000 or more, right, then maybe it is better, or maybe you need to get higher return on your stock investment to get that, right? So I don't know exactly what the calculation looks like on that depreciation calculation, but that's something you can again talk to your CPA about. So definitely keep that in mind. I think it's more closer to 5.5-6% rather than 4%. Now the other thing to consider, which hasn't been brought up during this post, is that you could always do a cash out refinance on your current property, right? You only owe like $37,000 on it. If you were to maybe do a refinance, kind of do a math where you can kind of see what your payment would look like. Maybe you can kind of keep your payment the same, right? But try to get as much cash out as possible. And I don't know what the payment is going to look like or how much the cash you can get out from it. But if you can take a chunk cash out, like say 50, 60, 70, $100,000 out of it, and yet keep your payment about the same, then, right, because obviously you had that payment for a while at a lower rate and that sort of things. So if that's the case, then of course you're actually keeping your property as is, and it's going to continue to appreciate while you have an extra chunk of cash, the equity that you took out without paying taxes upfront of 15%, plus paying say 3 to 5% in whatever the real estate fees and transaction costs and that sort of things, which right up the gate is what, 20%, right? Versus now you didn't pay taxes on it. Of course you had to pay fees to refinance your property, right? But now you were able to kind of take the cash out from it, where you can actually put that into the investment, whether it's a stock market or what have you. And of course, your rental is going to continue to go up, hopefully, and you're going to continue to get it appreciated in value. And hopefully soon, in a couple of years, maybe the interest rate will come down. Maybe you can do the same thing again with maybe take more cash out of the property, or maybe even reduce your monthly expenses on your mortgage, so that will kind of maybe give you a positive cash flow and things like that. So just a couple of other things to think about. Again, if the interest rates were a little bit lower, or maybe if your current interest rate was a little bit higher, that could be another thing to think about, just because that way you get an access to it without totally losing out on against paying taxes and fees and stuff like that. Of course, let's say you pay fees to sell your property, let's say you pay fees to refinance your property, same thing, but at least you picked up 15% in taxes that otherwise you would have to pay, for one. And two, now you have a investment in both, so you have a little bit of diversification when it comes to that, right? So you have a rental property, and you have a real estate, and you're in the stock market as well. So you get to hedge one versus another. I don't know if it's really considered a hedge, but you can at least diversify to have your money growth in both ways. So something to think about. I don't know if it's if that's right for you or wrong. No, maybe you're thinking, hey, what, the stock market's gonna go up 9-10% a year, versus my rental property is only gonna go 4.5, whatever, 4%, 4.5, and my rental income is this, and my math says I'm gonna edge out a little bit better with the stock market versus real estate. Who knows? Maybe not. So things to think about, things to consider. Hope that helped. And if you find this information very somewhat helpful, hit the like button. If you have any questions, concerns, thoughts, please share with me a comment. And then hit the subscribe button, and let me know that it's been helpful. Thank you.